This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Welcome back to the show, everybody. Listen, this is a really exciting moment here because we are going to be talking with Vesto, and it is going to be an incredible conversation. For those of you who don't know Vesto, and I'm going to get them to tell you, guys, how are you doing today?
Very good. Thank you, Brad.
All right. Christopher, how are you?
Excellent.
Wolfgang, how about you, buddy?
Very good, thank you.
Absolutely. Now, I had an amazing conversation with you guys a couple times now, and I am just so excited for what you're doing. Don't let me tell it. You tell us what you guys are doing and what your platform is exactly.
Well, over the last 2 years, we've been developing what we call crypto banking as a service platform. What that means is everything is in the cloud. And we're on-chain, Ethereum blockchain, and we're using stablecoins. So with the rise of stablecoins back one-to-one with US fiat or US dollar, we're able to transform digitally banks into the new era of cryptocurrency, stabilized currency to the peg to the US dollar. And we can provide all the services traditional banks do at a very low cost, and very secure and very fast.
It's remarkable. I mean, that is the best elevator pitch I've ever heard on this channel, ever. I mean, you know, it's always, hey, give me the elevator pitch. I'm getting off at the next floor, and you're riding to the top and you still haven't got it. That was amazing. That is about as succinct as it can get. Now, I'll tell you, you know, not only is it succinct what you do and what you offer, so is your timing. I mean, there's been incredible motion happening for crypto digital assets for custody with the banks. And not only that, and we're going to get in and take all of this and unpack it, but recently, in July last month, the Consumer Financial Protection Bureau really put a rule into effect that really acknowledges Ripple and XRP as far as a solution, along with GPI from SWIFT, as transparency that is provided like never before the sender and receiver actually accept these payments and move forward. And then we saw the OCC take action after that and announce that all federally chartered banks in the United States can custody digital assets. Can you guys just talk about that momentum happening from the regulatory side a minute?
Yeah, Wolfgang, why don't you take that one?
Yeah, maybe with the definition first. So in the context of crypto, cryptographic keys are financial instruments. And until before that announcement, banks were legally in a bit of a uncertain situation, a bit of a murky legal status, whether they are allowed to hold and trade cryptographic keys, meaning financial instruments. And with this is now crystal clear that bank can hold and be the custodian for their customers' cryptographic assets.
So if I'm understanding this correctly, the OCC, and now listen, I understand, and I know you guys clearly get it, you know, and for the audience here, we're talking about the US's regulatory standard here. And, you know, this is an international situation because this is digital assets for the world. But right now we're just discussing domestically here in the States. But it's pretty remarkable because if I understand it correctly, you guys correct me if I'm wrong, you have a plug and play banking services platform that allows the consumer for that bank to buy and sell the crypto. You handle the mitigated risk, taking it off of the bank, and the bank can now custody what they bought and sold through your platform. Am I right?
Oh, absolutely. Yeah. And it goes further than that. If you look at the landscape of the United States, you've got 5,000 odd banks, and a lot of them small, you know, community banks and so on. And if you look at crypto market in the U.S., 98% of the population that do have bank accounts never owned or sold, traded in crypto. So, you know, this is providing crypto to the masses. And, you know, as a phase one approach, we're sitting with a bank, and just an average bank or a credit union, and we say, hey, we can provide custodial services for crypto. And why would I do that? None of my customers actually, they don't participate in crypto. Then we say, well, we have something called DeFi, which is, interest yield at 12 to 15% right now, currently, even in COVID. So they can go to customers and says, oh, by the way, I'm providing today less than 1% return on your money by having a savings account. Well, I can provide you 12% today. What is it? What are the customers going to do? Even my
Travis, I don't know. I mean, I want to chime in on this one thing. Right now, DAI, that is one of our flagship stablecoins, is yielding 11.07% right now for basically for US dollar. And one thing I want to point out is the market when it comes to DeFi in the last, and I have no idea if this, and it has to be related to OCC, went from almost 2 billion to 7 billion in 60 days.
But maybe let me add the other element that you asked, Brad, on plug and play, because this, I think, is another very important element. So Chris and Travis mentioned the value proposition, but the Vesto platform has been built from the ground up as the custodian of trust for our customers' cryptographic assets. We didn't have the OCC totally in mind. We assumed something would be coming. Since earlier this year, there is in Germany a regulation in the make, which is called Kryptoverwahrgeschäft, which is custodial services for cryptographic assets. And from the ground up, we built our platform as being the custodian of trust for our customers. And the idea was that we built a multi-layered architecture where we really focus on a secure transaction engine, on basic financial services, and for our customers, a white label bank or an insurance, and for some insurtech use cases, they would build on top of our APIs use cases for value to differentiate themselves in the market. And what this is all about, and Chris, you as the CTO, you might add to this, at the end of the day, we provide a plug-and-play container with this custodian of trust, with this foundation architecture that the bank could integrate into their customer portal and then innovate on the customer front end. The basic services is basically a white labeling that the bank puts their logo and their workflow and their look and feel onto it. But if they want, they could fully innovate on top of this container of their own independent container. We also call this the foundation for the bank's digital innovation factory. And OCC came at the very right moment to make this a unique value proposition.
It really has. I mean, look, timing. I mean, no one could have known the timing how this would unfold. It's it's just that you guys have built something. You've continued to walk towards it, and everything else has really fell at your feet because you've continued to walk towards it before it was actually there, and now you're in this first mover advantage. What's next for you guys? I mean, how far are we away from seeing Vesto offered as a service to a bank? What are we looking at?
That's a really good question. And, I can only speak to the conversations we have in the last 10 days. So we're talking to everything from, mid-tier banks to leading digital banks out there in the marketplace, not to drop names. On the leading front, the most advanced banks, they're saying buy versus build. They already have their R&D groups, the JP Morgans, the Silicon Valley banks, the list goes on, right? And once they really kick the tires and go through what we've built, they just scratch their head and said, yeah, if we take this on in our R&D group, it's going to be another 2 years until we're at the same level of sophistication and feature set that Vesto has. So from that perspective, a lot of partnerships and white label banks on the leading front. And then because of the OCC, which like you said is extremely valuable and timely, is that you'll see a lot of these services popping up where even a regional credit union or bank will come out and say, we have this new digital, distributed finance. You can deposit stable coins immediately and start making, as Chris said, right now on average of 11 or 12% interest yield compounded daily. And you can literally in the app on your phone, everyone loves to look at how much money they're making by minute, by hour, by day, and we can do that. So even if it's not a Vesto branded service, there's going to be a web call from the website of the online banking, or there's going to be a mobile app where you're going to hit that, you're going to pull money from your bank account and convert that to stablecoin. So it's just like SoFi and a lot of these other apps out there, even peer-to-peer Venmo and the rest of it. You'll start to see that they'll adding DeFi and other services. What that means is we're underneath. We're the machine room. We're the plumbing infrastructure. It's all in the cloud, managing all these services. Once again, it's a white label, and then we're benefiting those companies so they can do more with their customers.
It's amazing. You guys correct me if I'm wrong, but I describe it, like to audience members, and I talk to it about like if you were to go to a website service that provides you with templates, and you could build out on top of this service and build out your own applications. Like Wolfgang was saying, if you wanted to innovate and do something different, you could build your template a little different on top of what you guys provide. Is that correct?
Absolutely. And just one use case, which is really popular these days, with COVID, a lot of companies are having difficulty with accounts payable, right? They've got their supply chain, their vendors, their payroll, all this type of stuff, and everything from paper checks to ACH, transfers and so on. And even international, they're having difficulty in COVID because they're moving away from the retail side, all digital. And we provide a lot of services to help manage all of that at a very low cost, very secure, and also, if you can believe it, insured.
Talk to me about that, because that is a huge selling point to either banks or customers. So talk to me about insurance, because this is like one of the huge implications of the OCC and what they're talking about. And look, this conversation goes beyond domestically here in the States. I mean, to Wolfgang's point earlier, I do remember what he talked about Germany, talking about custodying assets over there as well. And there have been massive, deep conversations by the Financial Stability Board connected to the G20 on stable coins and global stable coin. So, talk to me about the backing here.
Well, I would defer to Wolfgang. He's been more involved in that area. He can give you kind of an overview of what we have and where we're going.
Yeah, I mean, it's at the end of the day, it's an insurance, but the underlying principle is again a technical principle. So we have built our own, and Chris could talk more about this, our own leading edge multisig wallet. And what a multisig wallet at the end is, it's something that requires M out of N keys. In our case, 2 out of 3 keys to sign a transaction. So we have one, the customer has one, and the third one is with a cold storage custodian. And with this element and with some dedicated processes, we were able to find a partner that insures each and every account up to $100,000 in case of your device gets hacked, lost, or any tampering with that key. And that's basically it. So it sounds very complicated, but it's not. It's just you need to have the right security and cryptographic key infrastructure in place in order to sign a policy. This is what we did together with a partner.
Yeah, and the opening offer for the retail side, consumers and so on, is $100,000 per account. Our partners are willing to increase that. As you know, FDIC in the US is $250. Yeah. We can match that if we want, but that's the opening offer. And the aggressiveness of certain insurance carriers. I mean, the first one that we're working with through our partners, Lloyd's of London. So a great backing, if you will, for that insurance. So we're excited about that. Not only that we walk with a great technology for, let's just say, the average bank in the United States, then we're offering their customers, they attract new customers, and their current customers use DeFi to, have 11% return on their holdings, if you will. And then for the liability, that's always the issue dealing with banks, is they're saying, what's my liability? And then the risk people shut it down. But then we have the insurance. Well, what's our liability? It's minimal. So regulation, OCC, insurance to minimize risk and so on, and then advanced technologies to provide a great return on investment, which is just parking your money, if you will, stablecoins.
It's remarkable. And Lloyd's Bank of London, I've heard of them. You know what I mean? Yeah, heard of them. Not exactly a corner store. That's amazing. Right. Yeah, that's pretty amazing. So you guys are offering $100,000 insurance per personal accounts, and you could match FDIC if a customer wanted that.
Absolutely. Correct. That's a matter of premium. But I mean, we get going somewhere, and at the moment, the average crypto wallet on the planet holds, according to some surveys we found, between $600 and $800. So if we find institutional investors, or if we find individuals that are willing to put more money in, I'm pretty certain that we can match this.
That's wonderful. And that's a beautiful segue to where I want to go next. So talk to me about institutional side and retail side. Where's your audience? Where's your biggest? Are you getting attention from the institutional investor? Are you getting, what's your exposure and what are you getting a feedback from, and who is it?
What I'd say on that is, if you look at the retail side or the consumer side, we discussed that a lot about, what the benefit is to the bank, what the benefit is to the end user or the consumer. But the institutional side, or I might call it the corporates out there, they are using a lot of different services to move money around the world, right? And these companies are using intermediaries. They're slow. They're expensive, they're riddled with fraud and problems and so on. So in our ecosystem of stablecoins, we can transfer stablecoins pretty much any country in the world, almost all of them today. So that, for example, one corporate could say, I have a payroll of $30 million worldwide to all my offices around the world. We're able to actually stabilize and save them money by currency hedging. Because all these foreign countries, you pay out, salary, 2-week salary to employee, and that currency is fluctuating. Now these employees can park all of their, earnings, if you will, their salary in a wallet, which is their mobile app, and it sits there pegged to the U.S. dollar, so it's stabilized. Or another currency that we pick that's more stable than the U.S. dollar, which is having issues recently. So that's a great way to manage and save money. Another one too, as I said, is accounts payable. They can manage their money. And everyone's really, really tight on cash, especially with COVID. And so it's a very good tool to save money, have a better peace of mind because of security and so on. And it's near real time as well.
That's fascinating. And listen, I think I don't know about you guys, and I want you to comment on this, but I'm seeing a perfect storm developing here. And it in a good way, but from some sides a very bad way. Domestically here in the States, look, globally there's been a liquidity crisis well before we had any kind of health crisis, and I'd been reporting on it with co-host here on Friday shows for well over a year, and it's obvious that there was a pay to piper moment coming, and I think that moment is fastly approaching, and I think it's really going to take center stage here in the United States. Thursday, we have a conversation with Jerome Powell from the Fed, who said he's going to make some profoundly consequential comments and remarks and decisions about what's going to happen with the interest rate and things of that nature. And it's my suspicion that, he's not going to do what Paul Volcker did in the 80s and raise the interest rate, which would, speculating on that for a second, I think is going, if that happens, then that's going to obviously, send inflation running and the dollar's worth less. And then we see, platforms like yourself beginning to hit the rollout stage, because you guys are how far from rolling out, would you say?
We have our MVP, which is minimal viable product. So we are in negotiations for controlled pilots. That's really the first thing.
So you're very close. Yeah.
Very close. I mean, it's operational, fully demonstratable today.
Got it. So, with that, and then the backdrop of what's happening in the traditional markets, in the economy in general, if inflation really takes off, people are going to look for a hedge to their money, and they normally go to metals, and now they go to metals and crypto, and you guys are here. And if banks begin to roll out that services and that list of products, like Wolfgang said, that they could build out to suit their individual needs and their customer needs for what they want to begin to offer as products in the crypto space, my goodness, what are we looking at here?
Wolf, you want to take that, or I can?
Yeah, that feels like a perfect storm, but I'm maybe too Germanic, and I take one step at a time. So I think we need to establish ourselves in a market and gain the trust of a few major white label players with us, and then I think the use cases are endless. So whatever you can do with a fully qualified KYC customers with FDA grade, not FDA, sorry, a finance administration grade KYC and AML processes and anti-money laundering and all that stuff. Whatever you can imagine is possible on top of the platform. However, I think it will take a while until there is a broad, let's say, a run to everything in crypto. We still have to fight a bit the bad reputation of the Bitcoin transactions, where a large portion is in darknet type of. So it's, yes, we are extremely well prepared. Maybe we are best prepared in the market in the cryptographic stablecoin world. However, I expect this to take up dramatically, but it's not like we would be blowing the banks out of the water in the next or fiat out of the water in the next 24 months. I don't expect so. So I think it will gradually build. It will move out of the geek area where Bitcoin and Ethereum is something rather exotic, into be more a common thing, such as maybe 20, 30 years back, people started to take it as a normal to invest directly in the stock market, then people slowly had to adopt to it. It would be faster this time, doesn't take 20 years, but I think it also is not done within 12 or 24 months.
Wolfgang, I think you're making a fantastic point here. And to build on your point, we're in the early days of crypto and its growth. And, I constantly use the analogy of the early days of the internet. And where I feel like we are today is we have, just like the early days of the internet, we have all these siloed islands. There was AOL and Netscape and NetZero, exactly. and all of these represent the Bitcoin network and the Ethereum network and the Ripple network and the this and that. But what I'm looking at here, and I'm going to just see if I can share this. You guys may not see this on your screen, but I'm going to share this for the audience to see and read it to you guys. There's a new network out that's been created through a Ripple development arm. And this is just an example for our conversation today. The Flare network has floated an idea to integrate a trustless two-way bridge between the Ethereum network and the XRP ledger, basically. And it is expected to be one of the first governance proposals that the community will vote on. And this is exciting to me because I think it points to exactly what you're talking about, Wolfgang, where, this is really looks like the convergence. And truthfully, already the ILP, the Interledger Protocol, and the XRP ledger have been made interoperable with the Ethereum network. And this looks like, to me, like saying AOL and Netscape just came together. And we've not really begun to see that true convergence of the usage yet, because isn't that going to birth an enormous amount of ideas and mergers and acquisitions of these ideas and products?
Exactly. I think the world is not short on ideas. Sorry, Chris, go on, please.
No, go ahead, Wolfgang.
I said the world is not short on ideas. The problem, and as a consultant, I worked with many of the banks. The problem is not that the bank has the wrong ideas or the few ideas, but they are scattered. They're not nicely orchestrated. They entertain a portfolio of fintechs and insurance techs and property techs and whatever have you, and it's not integrated. So if you are a customer of, let's say, Deutsche Bank, and you want to work with some of the fintechs offerings, which are great fintechs offerings for personal finance assistant and whatever have you, there is no seamless integration into the entire portfolio. And with our approach, first of all, we are the custodian of trust. So we provide a curated and orchestrated ecosystem towards that customer, built on a unique identity, financial identity in that ecosystem that the bank entertains. So the bank could use our platform to, as I said, curate and orchestrate the innovation portfolio, first of all. And second, with when you mentioned Netscape and AOL and CompuServe and how all these things were called in the good old days, and Chris can elaborate much better on this, the stable coins we have integrated are ERC20 tokens. So, and Chris, it's 90% of the market capitalization in stablecoin these days is ERC20. So we could basically cover all the stablecoin currency on the planet, or almost all, very easily, and integrate them into the platform. So it's maybe a conversion of the financial means into crypto.
Christopher, you want to say something?
I would have to agree with Wolfgang, but I also have to agree with you, Brad. I mean, I'm the tech guy, right? So I get excited when I see all these new developments. And I think you're absolutely right. I think the concept of purely decentralized, right, is I'm a big believer. It's a philosophy of ours. And someday to have these blockchains that now are running side by side to truly work together in the same cryptographic techniques and be actually decentralized, irrespective if you're on Bitcoin or Ripple or Ethereum, in concept is amazing. We're on Ethereum and we're waiting for Ethereum 2 to come out, which could take a while. Having all these guys work together may take a while, but I think it's absolutely brilliant.
I do too. And, I feel like, ultimately that's how we get the best out of this space, is when we take the best attributes from everybody's tech, everybody's, innovation moving forward, and figure out how to make it serve the entire space in an interoperable way. And if we can do that, then we're going to have an accelerant come to just the adoption factor, because the innovation allows for a much smoother, ubiquitous experience, and back to the regulatory side, I think to complement those things that we're talking about there, if we can see, like I believe for Ripple and XRP, I believe XRP is a currency. So does the CFTC chairman, former CFTC chairman, Chris Giancarlo. I believe these kinds of designations free up institutional investors, the hedge funds and the banks, because they're already regulated to deal with currency. And if we could have something that is that clearly understood, there really isn't much that has to change to the regulatory framework for adoption, and we can just get down to actually using it.
Agreed. Absolutely agreed.
Yeah, and I think that the definition of a securities versus a currency and all the legislation discussion happening is really panning out for, like you said, XRPs of the world and the stable coins of the world and so on. And we're very excited that it is being separated that way, because we don't want to be confused with the SEC regulated or other, countries' securities regulations. No, we are a currency, so I'm very excited about that separation.
Me too, and the idea notion that we could, no matter what Christopher had mentioned, no matter what you're holding, you could participate in, the Ethereum network and an ERC20 token and a smart contract there, and use XRP to settle it back in to go to something else that you need. That is, to me, that's the internet we have. It's all these different layers of protocols. It's the FTP, the HTTP, the SMTP protocol working together to be the federated unit that we have now. Wouldn't you say?
Well, that's the utopia, right? This is blockchain taking over the web as we know it. That's right. That's the goal, and it will consume not only the finance, but it'll consume so much of what is out there today, like you said, protocols. So we're very excited to see that and be on the forefront of it.
Let's come back to stable coins for a second, and then we'll wrap this thing. So, stable coins, oh man, the early days investing in this space, when people started talking about stable coins, oh, it's a crap coin, it's horrible, it's this, that, and the other. But people are starting to realize now, and I know I really try to push the understanding of it, it's the on and off ramp into this digital space to begin with. It is an extremely important part of this entire space and getting on and off of this space. Can one of you speak to that?
Yeah, it is. It is such a very interesting, area to look at. So you've got, U.S. dollars, right? Fiat, and then you've got stable coins and how we treat that. So we have bank partners that allow us to, have our customers, take their U.S. dollars and, mint that or exchange it, if you will, into stable coins. And, the future is very interesting. So when you start looking at digital assets and stablecoins back to the, a fiat or a local currency, but what's next out there is moving away from fiat. And, countries like Switzerland and very advanced crypto areas, even the US, it's someday these will be digitally or gold backed and so on, and moving away from fiat. So today we're in the fiat world, and yes, we do need partners to be able to deposit those fiat funds, to back those stable coins one to one and so on, so it's secure and it's stabilized. But we see a big transition of moving away from fiat. Not right away, but in not to maybe 3-4 years, we'll start to see that digital revolution.
That's amazing. Look, you guys are really doing some amazing things, and I'm very excited for all the hard work you've done, and to see you guys just get out here and hit the ground running. And it's going to be so exciting to watch. And I feel like the regulation is hitting right in time with you guys launching. What can we look forward to with Vesto over the coming months and the next year?
Well, I mean, in a base level right now, we are a startup, 2 years into it. Just this year, we opened up, self-funded. We've been around the block, been multiple startups ourselves successful. So we self-funded up until, 4 months ago. We opened up a pre-seed round of $1 million. So even in COVID, we've raised 40% of that, $400,000. We've got a large investors, confidential, that looks like strategic, that'll close out the rest of 600. But for those that are interested in a company that we believe will be extremely valuable in the future, you can go to info@vesto.io if you have interest to learn more about an investment opportunity that could be not available in the next coming weeks. But as we all know, until the money's in the bank, it's not there. But in the future, I think that what we've done, is we're allowing the masses. So in the U.S., 98% of people that have bank accounts have never touched crypto. We're going to open the floodgates up. And if you look at stablecoin in the last 12 months, there's $290 billion that have been put on chain. What that means, 290 billion in transactions. At that rate, it's 800% increase per year. By next year, we'll be into the trillions of dollars in transactions. And then it'll start to replace, like they mentioned, the SWIFTs. So the SWIFTs and other transfers, about $125 trillion that move around the planet. And we're going to keep biting into that pie, if you will, or that total addressable market. And it's so big. It's just exciting to be a part of something that you say, wow, that's a land grab. So I think that's the future for us. And we're chasing it, and we're very humble and working hard every day, and a great team.
Well, I tell you something, I'm very excited for you guys. You make a fantastic point to wrap with, talking about biting away at Swift and what they're doing, because what you do does allow an opportunity for small, medium enterprises and banks themselves to go through your buy and sell side and avoid having to use the traditional payment rails, doesn't it?
Absolutely. You nailed it on the head. And the big guys are, starting to pay attention, saying, whoa, if we don't do something, we don't partner with companies like this, they'll wake up and say, our process is dead.
Yeah.
And, we're not greedy. We'll work with and white label Swift, for example. But it's just exciting that we have so many areas of opportunity. And like you said, it's just moving so fast, increasing every day.
It really is. Travis, Christopher, and Wolfgang, thank you guys so much for being here. Look, I want to have you guys back on in the coming weeks and months as you guys have progression happen for you, and as the regulatory side progresses. Let's keep this conversation going.
Brad, it's a pleasure. Thank you so much for having me on the show today.
Absolutely. Thank you all for being here. Take care. We'll talk to you soon. You got it.
Thank you, Brett.
All right, guys. Take care. We'll talk to you soon. Make sure you hit the like and subscribe, and we'll catch all of you on the next one.
Cheers.
Cheers.